If you know me, I'm a pattern trader and I like to A, spot opportunities, B, create that low risk or that alternative trade, and then C, and C is the really the stool that without C we can't do. A and B is useless. And C is planning, executing, and managing the trade. Right? In order to do that, you need a broker. And this is one of the most popular brokers that's out there right now. It's gained a lot of notoriety before COVID. Gained a lot of notoriety after COVID too. But is this broker back? So I want to give you a quick history on Robinhood that I pulled, and then I want to show you my favorite ways to trade stocks, ETFs, cryptos, and options using the Robinhood platform. Now, I'll mention this. This is not the only broker that I use. But I started using this one. I really started using this one because my son told me, hey, you need to check out Robinhood. This is where everything's moving to. And this was years and years ago. So let's talk about Robinhood for a moment. Was founded, okay? And their big claim to fame was commissions and no minimums. No commissions, no minimums. And so that brought a lot of the retail money in. And so it also brought a lot of the short-term trades in. Their app was something that I thought their app was genius. All right, it's easy to use. In fact, it was probably too easy, and it had too much emotion in it. And that's the part I didn't like, because as a pattern trader, we tend to not have emotion. We look at data, and then we plan our trade. But a lot of folks coming into the stock market for the very first time got emotional when they bought a stock. All these, look like a fireworks went off in Robinhood. Congratulations! And they made it emotional. And unfortunately, I think for a trader, emotion just doesn't work. In fact, I think it's one of your worst enemies. So Robinhood ran into that issue when they had outages. This back in March of 2020, they had outages. They had criticism and regulatory reviews. And this was in 2021 because of the whole thing that went down with the meme trades. And the fact that people couldn't get into or get out of certain meme trades when they were happening. I believe it's February 2021. A lot of people said, I'm never going back to Robinhood. So what's happened since then? I mean, that was 4 years ago, almost 4 years ago. Well, they knew they did something wrong. They apologized, and they also knew it was going to be a long road back to success. What did they do? The first thing I saw them doing was paying interest rates, big interest rates on cash. That started bringing in a lot of people that wanted to get to the sidelines as rates went higher. They streamlined their offerings more. And they were one of the first. They might have been the first, but they were one of the first that I know of to offer real cryptocurrency as part of their exchange. They started off with this faux crypto, but they flipped it over and started offering real cryptocurrency. And I thought that was a big game changer for Robinhood. Their earnings have gotten a lot better, and the stock has more than doubled in the last year. So let me show you how I use this. And what I did was, as everyone was watching the Super Bowl, I'm watching too. I had a Super Bowl party, and by about the middle of the third, it looked like the Eagles were going to win. And I started thinking on my mind. I started thinking about the stock market. Started looking at the stock market, and then I came up with this idea. I want to show everybody how I use Robinhood, or the basics of what orders I like on Robinhood. So I want to talk about stock and ETF order placement, option order placement, cryptocurrency order placement on Robinhood. So because this was last night when I put some of these together, that's why you're seeing the dark version. So Robinhood has that daytime markets are open light version, and then at night it flips to a dark version. So yeah, I was up at night throwing this together. Everything I'm using for examples is using the SPY, Spider ETF. So let's blow this up here a second so I can see this. So you can see here, closing price coming into the weekend was 600.23. Now, if I want to buy the SPY, I'm going in and I'm literally clicking on buy SPY. My order piece comes over here. What am I doing? It's a buy order. I'm buying in shares. Let's say I buy 100 shares. If I buy it at the market, then I'm paying market price. It's going to estimate a cost for me, but it might not be the cost because it depends on what I get filled at. A market order is an order that you get filled best possible price, fastest execution possible, right? If I want to flip this to a limit order, then I'm going to change that order type. I'm going to come up here and under the buy order, that's going to give me a limit order. I have limit orders. I got stop loss, limit stop, trailing orders. There's a lot of different ways you can use Robinhood. Okay. I typically use a couple of different orders on here. I don't use them all. I'll tell you what I use for each in just a moment, but this is where I would change over to a limit order, and then I could review that order. And at least the difference between a stop and limit order is I know what I'm getting, I know what I'm paying, I'm buying, and I know what I'm paying for that order. So after that, you just simply review the order, click submit, and there you go. What about limit orders? Well, or more importantly, what if we want to trade options instead? If I want to trade options instead, you scroll down a little bit and you'll see the area that says trade SPY options or trade options on whatever ETF you are interested in, right? So if I do that, that's going to bring up the option tables. And around the option tables, I will scroll up and down and decide which one. Maybe I want to buy a call option. Then I want to look at which one I am interested in buying. What I'll do is I'll make sure that if I'm buying a call option, that buy call is selected. I could sell puts. I could sell calls, buy puts here. Next thing I want to do is I want to look at what's going on with the expiration. But the first thing you're doing is you're picking your strike price and you're clicking on the price. Then you click continue. If I click on the price, immediately what's going to happen is it's going to change this, or in this case, it might change it to an option risk graph. An option risk graph is going to show you what you're paying, where your break even is, and then moving forward. From there, I'll fill in the quantity. How many call options am I buying? Is this a market order? Am I just going to buy at the market? Am I going to buy a limit order? And then the other part that I think is hard to find are things like what's the time in force? So is this a day only order? Is this a limit order? All that can be put in right here on the ticket. Once you're done, you'll click continue or review your order. Once you're happy with what you see here, right? In this case, it shows 5 contracts, $12.90, good till canceled. There's my max cost. I hit submit, and then the order is in. If it's a limit order, it might get filled. It might not get filled. Depends on whether that particular option trades down to your buy price. All right. Now, if you're a spread trader, I trade a lot of spreads, especially on the buy side. Then there's an area called builder. And the builder area allows you to actually build spreads. You'll come over here and you'll just click on that builder button. And then you could scroll back and forth through all the different spreads that they have. This is just a snapshot. So you got to scroll down to see everything. But they have single leg, vertical spreads, and much, much more. There's many different spread builders to choose from. I'm going to choose, and I'm just going to show you right now what I choose for this video is the call debit spread. So a call debit spread is also called a bull call spread. You buy a little higher strike call, and you're lowering that cost. And in a lot of cases, your ROI could be as good, if not better, than buying a call option on its own because of the way you can set these up. Click on that. Here's the things I need to know in order to use the spread builder. Really just 2 things. I need to know the width between strikes. What am I buying? What am I selling? What's the distance between those strikes? And then the other thing I need to know is what the expiration date is. So when you build a spread, like in this example, SPY, then I've got the width here. I can change that. $1, $2, $5, $10. You can do all kinds of stuff here. You can leave this alone if you want to, because if you do the width builder, it's going to throw them together down here below. Or you could just say, I want to get a certain strike price, and it'll throw that strike price out for you. Here's where you change the expiration date. So if I don't like February 10th, which is today, then maybe I go out to March. So this is what I'll change. And then after I've made my changes, here's my example. $10 strikes, distance between the buy and the sell, March 21st. And I come down here and I'm like, oh, all kinds of different ones you'll see. So maybe I like the 615, 625. I can see my bid and my ask. And then from there, I can get an idea of what I want to pay for this. And I'll put in my number of contracts. And then what I'm doing is this is the spread price. I'm not buying, I don't have to put a price in for the call I'm buying or the call I'm selling. I put in the spread price. They do the work for you. So I know what I'm paying for the spread price, and I can come down here and I can see what the risk graph looks like right away. Once I'm done, I click review order, and then we go from there. So that's the way that I can look at stocks. Crypto's the same way. You go into the crypto portion. It's much the same, where you can buy cryptos, you can buy them at limits, you can buy them at markets. But the way that I set my orders up, the way I like to trade them is as follows. If it's the stock market, or if it's an ETF, or if I'm buying a cryptocurrency, I'm typically buying at the market. It's an asset. It doesn't have time value. And if I like it that much, at that point, I'm getting in. Whether I'm a trader, whether I'm a long-term investor, I typically will say, all right, I'm adding this to my portfolio. I'm going to add a stock, I'm going to add an ETF, or I'm going to add a crypto at the market. Options are a different animal. So let's talk about what I do on the sell side. If I'm selling premium, if I'm selling put options, which I tend to do, and they're expensive, then I'll typically go in and do those at a limit price. I won't do these at the market. Right? I'm typically a limit trader when it comes to selling high premium. How about buying? If I'm buying regular premium or even cheaper premium, then I'll look at buying options, or I'll even look at buying option spreads. I use limit orders, because an option spread is more than one leg. You're going to have a bid and an offer for what you're buying. You're going to have a bid and offer for what you're selling. You put those together, that's two bids and offers. It might widen the spread a little bit. I want a limit order when I'm doing an option spread. Now, if I'm looking at buying calls only, or I'm looking at buying puts only, and they're cheap, and I'm looking at like a FICO or something that's pulled back a little bit, not much, and maybe I say, if we get back above that high, and I believe all these shorts are going to take out, that's when I want to get involved. And I might use a stop limit or a stop limit order, which says execute only when it's moving in my direction. Now, stop order becomes a market order at that time. A stop limit order becomes a limit order at that, when we hit a certain price. So there you go. Expensive options, limits, right? If I'm looking at price direction and that option is neither cheap nor expensive, I'll do limit orders on it. But if I see something that's running in my direction and it's cheap, and I want to jump on board that northbound train, if it's bullish, or southbound train if it's bearish, I'll take stop orders to get me into an option when it's running in my direction.